Okay, good evening, good morning, good afternoon. My name is David Sembek. I'm the head of the Policy and Analysis Division at APO. Today, we are going to talk about investment strategy for SMEs and startups and entrepreneurs and business personnel, anyone who wants to get the investment when they do their business. Today, I'm very happy to introduce and invite all these renowned investors from Thailand, Indonesia, and Bangladesh and USA. So without further ado, let me ask you to introduce yourselves. Maybe you can start like Irfan.
Hi, thank you, David. Thank you, everyone, for taking the time to join us in this session. My name is Irfan. I'm dialing in right now from the US. I'm originally from Bangladesh. And by background, I've essentially worked in R&D and academia for over a decade, and then moved into the startup side where I have launched several startups and made a few exits. And post that, I've been in the investment world, as I've always been very deeply connected with the startup ecosystem. And I felt that it was imperative for me to participate in the other side of the table, supporting startups in their growth. That being said, as of right now, I'm a co-founder of several venture funds that are involved in deep technology, mainly in blockchain and space technology. But I also maintain a small investment arm personally where we make angel investments and provide startup consulting support services. So that's pretty much me in a high level. Thank you, David.
Thank you. Vania, could you introduce yourself?
Yeah, thanks, David. Hi, everyone. I'm Vania. I'm from Jakarta, Indonesia. My background is actually design, surprisingly, but then I studied creative economy. That's when I fell in love, sort of, with the startup industry. And now I'm responsible for Merah, Putih, Inc. It's a investment vehicle for our parent group called GDP Venture. GDP Venture is a venture builder and strategic investors. We solely invest in tech startups, and we're vertically agnostic. And we are founder-first startup. We consider ourselves as a family office, so we may have a few differences with a typical venture capital or VC, but we focus on, Merah Putih Inc. focus on early stage startup, local Indonesian startup with good founders. Thank you.
Thank you. Mameaw?
Hello, everyone. Hello, David. Glad for, to be talking today, and thanks for having me here. My name is Pahrada Sapprasert in Thai, but all Thais we have nickname, and my nickname is Mameaw. I'm a director at 500 TukTuks, which is a Thailand and CLMV focused fund from 500 startups. If you haven't heard about 500 startups before, we are the Silicon Valley-based VC. We are the most active seed investor in the world, and we are also the most global VC in the world also. And in Thailand, we have 2 funds, and we invested in over 70 companies so far, and we are still actively investing.
Okay, thank you for all the introduction. Today, the reason why we talk about the investment in the startup companies and SMEs, especially startups, because nowadays we talk about open innovation for the past few years already. And then also, when you talk about innovation, you cannot stop talking about the startup companies, because startup companies can come up with very innovative ideas, great ideas, and then actually it can also be helpful to the big companies at the end of the day. So without further ado again, so let's just jump to the question number 1, because we have a very limited time. I want to put so much information useful to the entrepreneurs, startups, and SMEs. So the first question will be, as an investor, so what are the most important points when you evaluate a company or startups and SMEs? So what is the most important points for you? Maybe we can start from Mameaw.
Yeah, sure. Since we're the seed investor, I tend to look at the deals flow a lot. And but as I invest in early stage company, there's no like revenue stream that we can look at. There's no track record for like a few years that we can look at. So the main thing that we look at before we decide to invest in a company is actually the founders and the team. because based on my experience, we've invested in over 70 companies, right? And the successful companies, they tend to have like very like driven founders and the equipped teams, like they have, like they know when to scale and they can motivate the team to thrive fast, like better every day. So yeah, I think the team is what I really look at when I make an investment.
Okay, Vania.
Sure. We're founder first investors. So we, same like Mameaw, we focus on the founders and the team. We believe that we believe in the founders. One of the reasons or decision making that we put into our considerations is, do we trust the founders to develop and to venture build his or her startups with our help and with our network and with our ecosystem that we have built for the past 8 to 10 years. So yeah, the first thing that we would consider when investing in a startup is their founder and team, and then we'll move on to their product, because product can be, changed, or it's we can see innovation each and every day, but someone's characteristic and personality is much more important.
Okay, Irfan.
Yeah, so for starters, thank you everyone for sharing, and I think I absolutely agree with the first point about the team plays a very important part, and as I am an investor also in the very early stages as well as seed stages. Team and team chemistry plays a big part. However, I would also like to add the other aspect that we usually look at, and especially because of my work in deep tech, is technology abuse versus need, and this is a common factor that we come across, especially in cutting edge investment areas where some of the new hype industries or technologies have taken a huge trend, which would create a lot of interest among investors. So we like to take a deep look into a product before we make any decisions to move forward. Thank you, David.
Okay, I know that you all talk about the founder and then team also important. But when we talk about founders being important, we are talking about the school background, or you're talking about their work experience. What do you see when you see the founders? Maybe we can start from Vania.
Yeah, everything that makes a person, it's important when we look at someone, when we get to know them, how they work under pressure, whether they want to listen to others' opinion and feedbacks. Those are important traits, and more into characteristic, and how they, how they see their business as a business and not something too personal. I think everything makes up to the founder.
Mameaw, what do you see in founder when you talk about founder? Important.
Yeah, I totally agree with Vania, but I would like to add some points. Whenever I meet with the founders, I always ask them, what is your vision and how do you plan to achieve that vision? Because, to ask this to the founder is very important, so we can see how they look at the company and how they would motivate their teams. So it's not about only the backgrounds or their work experience that would contribute to a person. So it's everything all together. And I don't think work experience is that important. You can be you can have, like, for example, you can have advertising background for your whole life, and then one day you see an opportunity, and then you dive deep into it, and then you develop the expertise from there, and then you put more than 100% in. So it's not like you have to stick with what you've done for the whole life in order to achieve what's better in the future. So yeah, I think that's I'm very open about the background.
Okay, thank you. Irfan, do you have anything to add?
Yeah, so again, I just want to say that, I agree completely with all the points that's just been mentioned. Apart from that, I think one of the most important aspects that I would look at is attitude. Attitude is key to successful founders as well as what they're trying to build. I mean, you can have extensive background, you may be the best person suited, but if your attitude is not right, which is usually the case with a lot of founders as they come across, their ego tends to play a big factor as they try to build a company. So we like to see what kind of attitude, if you have a roll up your sleeve kind of attitude, willing to do what it takes to take your company to the next level, are the strong elements that we look at when we make investment decisions. Thanks, David.
Okay,
Yeah,
thank you.
I would like to add a bit, because a lot of times, we like the company, we like the product, we like the market, but the founders tend to be not coachable. That's the deal breaker for us, because investing in a company is like a long-term relationship. If you cannot communicate, then it's the end of the line for us.
Okay, thank you. Let's move to the next question. So we cannot stop talking about the COVID-19. So let's just talk about a little bit about before and after pandemic. What's the big difference? What do you see? Maybe we can start from Mameaw.
Yeah, sure. I think the general landscape, we see the people are more cautious about spending money. So that's harder for startups, obviously, to get people to spend and buy the products or to invest in the companies. But the upside is everybody is forced to become more digitalized. So it also opens up another market and opportunities for them also. And I've also seen a lot, very, very strong trend about impact investments and sustainable business. So yeah, I think that would be like the trends that I've seen post-COVID.
Vania, what do you think?
Sure. I see three major things. The first one is agile. Everyone is becoming more agile, and I'm talking about our existing portfolio and other businesses in general. First, they become more agile. They have to move quick. They have to change quick. They have to adapt quickly to the situation, because this situation, this pandemic, is happening to everyone in the world. It's not just happening to a country or a certain area of the world, part of the world, but it's happening to everyone. So agile, everyone is becoming more agile. And the second one is everyone is becoming more creative in finding new revenue channels, new leads, new sales, new business model. And the third one is that they show resilience. Founders have shown resilience.
Irfan?
Yeah, so for starters, I want to agree with Mameaw, but I couldn't absolutely agree with Vania, and what she just mentioned, that, founders and companies and businesses have become highly innovative in the pandemic era, right? So we have seen, strong, challenges, globally that we are all facing right now. And essentially at the same time, as we are talking about that, resilience is a very important time. How are founders able to storm this, difficult time, economically, socially, as well as emotionally? It shows mettle in an organization that they are able to stand still, and would be the key, I would say, stone for them to build successful companies in the coming days. And that being said, we have seen highly innovative companies that are trying to provide solutions to consumers right now, who are desperately seeking for newer, innovative methods of services being delivered to them. So, definitely we have seen massive improvement. And as we talk about the digital evolution and the curve of the digital evolution in the pandemic, we've seen that like becoming literally 90 degrees vertical, and companies are able to cope with that and are competing against each other with that. Thank you, David.
Okay, thank you. Actually, that also leads to the next question, because now I don't think that you will invest in certain sectors now after COVID-19. So maybe we can talk about which industry sectors are you looking at very closely right now for possible investment. Maybe we can start from Vania.
Sure. We're actually vertical agnostic, but looking at our existing portfolios, we categorize our existing portfolios to three major verticals: e-commerce and services, because our bread and butter is in advertising and marketing. And then we also like media, so we have invested in a few media companies, and we also have invested in entertainment, like movie studios and gaming studios. So those are the three main verticals that we have been investing, but that doesn't limit us to the verticals that we invest. It doesn't mean that we only invest in those verticals. And for me personally, I've seen education tech rising, of course. I'm pretty sure Irvan and Mameaw have seen a lot of pitches from education tech as well. And I think mental health is going to be very interesting after, or caused by this pandemic, mental health related startups.
Okay, thank you. Mameaw, maybe you can share your insight also.
Yeah, based on what I've seen in Thailand and maybe in Southeast Asia, I think e-commerce is benefiting from this pandemic a lot. So I've been focusing on e-commerce related startups. You know, like e-commerce, they would come with e-logistics and then the sorry, e-payments as well. So those are the ones we look at. Sorry, and then we also look at the fintech a lot, and then the health tech, and as Vanya mentioned, a lot of education tech, and we also look at the SaaS. Like I think the trend is that we tend to invest in things that are more like versatile in the situation, and probably like pause something that we are not sure when to pick up yet. Like for example, the events related, you know, like the physical events or the travel tech. So we are, you know, reducing it at the moment.
Okay, thank you. Irfan?
Yeah, so, you know, and again, you know, the investment is, you know, the industries are quite, you know, different from one another from all the specific funds that I look at. However, you know, one common factor that there is that one, for starters, that we have seen, you know, direct impact, and as, you know, both Mameaw and Vanya mentioned, is that, you know, in the e-commerce sector, because, you know, most people are right now home, you know, looking at service delivery is a very important industry that we're looking at. EduTech is another important factor. Most of our kids, you know, and people are not able to go to school, so companies, new companies are, you know, building innovative models to deliver services in those areas. Also, we have seen in the healthcare sector, certain telemedicine companies also have picked up, where, you know, not only mental but also physical health issues, where, you know, hospitals are, you know, over capacity right now and not able to deal with patients, especially in-house patients. So a lot of the patients are being dealt remotely. And on top of that, you know, most offices that are being moved right now remotely are looking for new, you know, back-end tools and service provider or providing company. And, you know, as we are speaking over here through a live conference, you know, we are using a tool that's enabling us to do that. So there are several tools, you know, in team management, etc., that a lot of the companies are looking at, and especially large enterprises are looking at, and that I think are interesting investment opportunities. Thanks, David.
Okay, thank you. Okay, let's ask this question, because I'm sure that many startups and entrepreneurs must be interested in this. So if we can talk about successful cases that you invested in, and then even until now, after you invested in those startup companies, you are very satisfied, and then you never regret your choice. Maybe you can share one case. Maybe you can start maybe we can start from Vanya.
Sure. Well, everyone measures success differently. And not to mention any brand or any name from our existing portfolio, we've seen different portfolios achieving their own target, their own milestone, and that is an achievement for them. That they define different things as success. Some businesses may see, like, when they hit a certain number of monthly active user, for example, it's a success for them. Some of them focuses on their vision and mission and their social impact, perhaps. So I can't just mention one example because I've seen a little bit of success out of every of our portfolio. But yeah, I think when the founders and the team, they have set into one goal, they have set into one vision and one mission, and they and every single day they're achieving something towards that goal, I think that's success for them.
Okay. How about Irfan?
Yeah, thanks, David. And again, I couldn't agree with Vanya more, but the way I would structure success, and again, there are different, like she mentioned, that different ways to measure success. So to me, there is that emotional success point, there is that financial success point, and then of course, overall, how that, social success point, right? How that startup has been able to make an impact into what we're trying to achieve. So as a person who is highly passionate and have been involved in the startup industry as an entrepreneur myself, and the reason I got into the investment side of things is to back passionate founders. It gives me a lot of pleasure, and also I would call that a success when I'm able to see that founder as well as their project and their company go leading to success. So that being said, of course, as I also deal with traditional, venture capital firm, we have LPs, and to LPs we have to satisfy, basic certain industry standards. So in that capacity, I would say that one of my most successful industry that actually kickstarted for me to be in the investment world actively is my participation in the early stages in the blockchain industry. So I've been involved from the very early stages, and I have met several industry benchmarks, and and I would call that also a success, along with all the other successes that we discussed while in process of building the companies and working with founders. Thank you.
Okay, Mameaw.
Yeah, totally agree with Vanya and Irfan about how we measure success differently. But I think in the startup world, people tend to think about financial success as a success, like the fundraising and also the growth. So I can take one example here, which is I can say the company. It's Pomelo Fashion. I'm not sure if you've heard of it, but it's a very fast growing fashion brand that it's my personal favorite also, and I shop a lot on this brand. So what I've been amazed at what they have already achieved is that they started off as just a normal fashion e-commerce, and everybody was doubting them that how is fashion e-commerce is going to differentiate from just like you selling clothes on the Facebook shops, or just like why is it interesting, how is it going to grow into something big. But I think the founders and the team did a really, really good job in understanding their target customers. That, like girls, we don't want to buy clothes online because we are afraid that the clothes won't fit, and then we cannot exchange it back, and then we will, lose the money, lose the clothes also, and like we like to browse a lot of fashion. So they really, like Pomelo Fashion, they really understand this pain. So they make the UX and UI really easy for us to scroll through like the collections, and we can, like order a lot of stuff, and then we can try it on and return what we don't like and keep and pay for what only fit us and we like. And I think that is really important, like they take time to understand and solve the biggest problem with online fashion. So because of that, they attract so many investments, and they achieve the Series C, which is one of the like Thailand is still young in terms of ecosystem, and we don't have any like the biggest fundraisings or the exits, not a lot of that. So Series C is like very big in terms of our measurement. So yeah, that's the example that I would like to talk about today.
Okay, thank you. Let's just go to the opposite side, like any cautionary tale. Like for example, this kind of startup company that you met before, and then I would never ever invest in this kind of startup. Maybe it can be very helpful to the startups and entrepreneurs when they prepare the investment raising. Then maybe you can share your cautionary tale based upon your hands-on experiences. If you need some time, I can go directly to who want to volunteer to talk about it first. Who is ready?
I'm fine
Mameaw?
with that.
Irfan? Okay, Irfan, let's start from here. Okay.
Great. So I wouldn't single-handedly point out any specific startup, but there has been many. As an investor, we come across various startups almost all the time. One of the biggest, I guess, no's would be, and a cautionary for founders and startups: do not try to oversell yourself. I know that it's very interesting, and it sounds like a lot of the marketing training has been done for you to come in front of the investors, as well as institutional investors, to try to sell your product. I think what it takes is really how well one is able to understand that. So I think in a lot of cases, and as I mentioned, one of the sectors or the technology that I have been very strongly associated with is in blockchain, which has been a hype word for almost right now few years. Right now, we have come across a lot of startups and a lot of companies who would pretty much abuse the name of the technology to get funding, and also a lot of investors who were kind of like facing the what I call the FOMO trauma, with the fear of missing out, where allowing these kind of companies to get into the space and kind of like create a kind of toxic environment, which was not helpful for the ecosystem. So that being said, I'm just giving a high level overview as to the kind of companies that we do not like to see or come across. Thank you.
Okay. Maybe we can go to Vania.
Sure. Thanks, David. Yes, agree with Irfan. We at GDP Ventures would go back to the founders, because we're founder-first investors. We would take a look at their character. We would like to get to know them better before we decide on investing in any startups. We could pick up some early alerts or red flags when we first talk with them, discuss about their business with them, whether they want to listen to others' opinion, whether they have the same vision and mission as us, because we're a venture builder and we have to have the same mentality when it comes to building a business. We know that it's not easy. We know that it's not simple in any way. It requires effort and time and investment to build a really good business that offers good value. So we want to be on the same level and perception since the very beginning. And it kind of prevents us from making bad decisions on bad investments. So I think it really comes back to the startup's character and startup founder's character and personality. Thank you.
Okay. Mameaw, any insight?
Yeah, I can think of the two insights that I would like to talk about. Like the first one is that the founders are not, and the team are not fully full-time. They have like side business or side projects, and then they cannot focus on driving the business, and it always end up like not successful somehow. And secondly, I think it's about honesty. When the companies, other founders pitch to us, and we found that they are not entirely honest about the data they give us, or we, like one case, we got a question from another investor saying that, oh, this company claims that we already committed to invest in this company, but we haven't done so. So we found out that the founders are not honest about the situation and data they gave, and investors in the region, we are very connected. So yeah, when the founders is not entirely honest, then we all would know about it.
Okay, thank you very much for sharing. Actually, I also met some startup companies founders and CEOs actually doing their own sideline jobs, and they are not actually dedicated or committed to doing their own startup companies. But at the same time, it's not because they are just busy, it's because they are worried about their own startup company. What if it goes wrong? Then I have to survive anyway. So instead of just focusing on the startup itself, they focusing on their sideline job like insurance. Actually, I don't know whether it's really always right or wrong, but sometimes I think it can be more distracting than making their own startup companies successful, right? Okay, let's just move on to the next question. Actually, this is also related to what I just asked you about. So when you see the startup companies, it's not only about traction, right? I mean, many startup companies focusing on actually traction. They try to get some market validation, and they want to show that their products and services are actually marketable and sellable on the market. But do you also see the other factors other than just tractions? Maybe Irfan, you can start.
Thanks, David. Great question. I'll pose that question and maybe take the question in a different way. So essentially, when we're talking about startup, we're not really thinking of it as a large corporate or even having significant amount of traction. But what we're looking at, as I mentioned earlier, is the attitude, right? So for the founders, and that attitude becomes part of the culture of the team also, is that how we're not expecting startups coming to their offices wearing suits and any of that, but we want to see that how the team is cohesively developing and connecting and addressing a problem, right? And then I think that is essentially what we like to understand, is that how the team is able to roll up their sleeves, as in any startup, team members, they have to wear multiple hats, there's so much stakes while they're trying to do that, but they also have to be very precise and also have to know time management. So I think these are things that start coming into play. But one of the things that we have always seen in early stage startups, and even startups that went on to become large startups, we have had some really high profile spats between founders as well as early team members. That is definitely a no-no. That is a definitive culture breaker and a system breaker for any successful organization or organization that is meant to be successful. So I think it all goes down into how you're channeling that attitude, how your leadership is playing a big part. And that's why in our early stage startup support, we provide these kind of guidance and services while we are making these investments in order to de-risk and protect our investments. Thank you.
Okay, thank you. Maybe Vania?
Sure. Completely agree with Irfan. Yes, we have to see both the corporate culture and traction. And adding to what Irfan has explained is that are they in the right track to profitability? So profitability is also important. I'm happy to see a lot of founders and investors has become more conscious about profitability. So they have prioritized everything that they do, the milestone that they achieve, the decisions that they make inside the company, inside the startup company, whether or not it will bring the whole company to profitability. So yeah, that's my take on the question.
Okay, thank you. Mameaw?
Yeah, totally agree with these two. And I think what I like to add just a little bit is that, of course, we think traction is important. But as I think a friend mentioned that for the seed stage company or the early stages. It's not the big corporate, right? That the existing culture has already been there, but it's actually the culture that the founder or the CEO has set for everyone. And I think that's important in the long run because it contributes in this aspect of like how they would retain the talents, because actually like talent is really important to startups, like to build a business and to grow, right? And if the company doesn't have a good culture or if the CEO cannot motivate their teams or the co-founders enough, then they cannot retain the talent. And if they cannot retain the talent, then there's a low chance that they would grow and become successful.
David, I would
Completely
just
agree.
like to add something to this. As
Sure.
it's pretty late on my side, and it's difficult for me at times to remember everything. But I thought like this was very relevant as to what we're talking about. So one great investor that I take a lot of examples from is Chris Saka, and he mentioned that you don't create a company culture or a startup culture by putting a vending machine or a coffee machine. So in a startup, it's very important that you're speaking with everyone. EQ is a very important aspect of and that practicing EQ between founders and the team members are a very important aspect. And I just wanted to put that in front because that's one of the major aspects, that talking to team members, and even at times startups which are being founded by friends who went to colleges together can grow distances between each other if that particular listening to one another, talking and understanding is not being continuously being practiced. So I just wanted to add that. Thanks, David.
Okay, thank you. Anyone else want to add something more? It's okay.
I was about to say that I completely agree with Irfan and Mameaw. Yeah, that the founder, they reflect their corporate culture. So yeah.
Okay,
Thanks,
got it.
David.
Okay, let's move on to the next question. So actually, we talk about the exit strategy for startups when we see the startups, right? Before you make an investment. If a startup companies talk about the IPO, it's about maybe next 2 to 3 years, then investors really happy to hear that. But at the same time, also some startup companies also exit strategies like M&A by big company. But then the question is like this: sometimes we hear big companies acquired an innovative startup but couldn't scale it up. So why do you think so? Because now we are talking about open innovation, and the many big companies in the United States, like Facebook, Google, and Microsoft, we all the time hear that they acquire some big, as a very innovative startup companies, right? So we are not only just confine ourselves to those global companies in the United States, but just so normally we heard also many times that big companies acquired a very innovative startup companies, but at the same time, a few years later, we didn't hear any good news from them anymore. So why do you think it happened? Maybe you can start from Mameaw.
Yeah, I think it's one obvious reason. Well, I like to hear from others as well, but I think like one obvious reason is that whenever a company acquires a startup, they want the startup to become part of their business units. Like for example, they want to achieve this special projects, and then they don't want to build the team or the technology themselves. So acquiring is easier and the faster and cheaper way for them to achieve that company's vision. So when the startup is transferred into the big corporate, so it becomes just a unit in the company, and it has a specific direction that corporate sets for them. So they are not free anymore to go achieve their visions or to grow in the non, not aligned with the corporate like vision or the target. So yeah, I think that's the obvious reason that I can think of.
Thank you, Vania.
I agree with Mameaw, because when you don't hear about that startup any longer when a bigger company acquired them. It could be because they're now under one name. It's just as simple as that. It's because they see value. The bigger companies must have seen values in those startups. They must have seen something that could benefit the bigger group, and both of them as one entity. That's why probably they decided to acquire the startup, and that's probably we no longer heard their names on the news. But realistically speaking, it could also go to the other way, where it could be many things, like different directions and different vision and mission between the bigger companies and startups. And although unfortunate, but it happens all the time. So because I've seen founders with their own idealism, their own vision and mission, and when they are merged into a larger company or a larger entity, it could be different with the larger company's vision and mission. And I think it's pretty normal. It happens all the time. It's just it goes back to their the agreements between the bigger company and the founders of the startups.
Okay, Irfan.
Yeah. So again, of course, there's always two sides of the coin, but I want to be religiously focused towards your question in this case. Why it didn't scale up. So just as an example, a certain large auto company based over here has been constantly declining in terms of their innovation, in terms of their businesses, sales, etc. So I have personally never been a big fan of corporate venture capital itself, because I feel like it is a productive solution to the problems that the corporates are facing. And the problem that they're facing is that they cannot harness innovation. Is the culture, again, that plays a big part. So the culture sets the precedence and the trends within the organization. So in a lot of cases, it's not a proactive process from the corporate organization when they're going out and making investment, but it's a reactive process where they're actually going out there and trying to make investment, trying to save faces. So there was a major acquisition of a startup, auto startup, that has happened here from this large particular auto manufacturer, which was probably one of the largest deal in a startup, over $1 billion. And essentially, it didn't really pan out well, because at the same time, as we discussed, when startup has a very different set of culture, they have a very different set of people, they have an agile business model. And when the corporates, essentially, try to make, or the large big names try to make, acquisition into this company, trying to save their name and their brand and their image, or they want to associate with that, it becomes not a win-win situation, but a win-loss situation. Whereas, two different brands, can completely function on its own, and the other company can very well be successful. So of course, other companies have been more proactive, and especially, as you mentioned, some of the highly innovative companies, as they have been startups, just very recently, over a decade ago, they've all been startups. So they still have the remnant culture of a startup organization still remaining there, as they have been attractive to people who are willing to work over there. Thus, the culture over there are far more open. So, and you would see more success rates there. But that being said, I think, in a nutshell, corporate have many other different mechanisms of participating in acquisition without really hurting the startups. And essentially, there are ways being participatory through being LPs, etc., that enable them to access this market without making impact into their businesses as well as the startups businesses. So my take on that is that essentially, there are two different culture. But corporate culture have a major inertia within their organization, and whereas startups are essentially very agile. So there usually it's polar opposites, and when that polar opposites happen, there are a lot of friction over there, until and unless there is an intermediary who knows how to actually very well merge that entire process. And there has been successes in those places where, you know, the intermediary understood what was necessary between, you know, trying to get two different companies together. So that's my take on that. And, you know, thank you, David.
Okay, thank you. Maybe we can go to next question. That nowadays it seems like if we find maybe affordable prices or cheaper services, then we automatically think that, oh, this is really innovative. But at the same time, if it doesn't lead to the actual profitability or it leads to the more losses on that company, can we call it innovative? It's because it's not like it's really sustainable. Of course, from the customer's perspective, just more than happy, right? Just you can enjoy the affordable prices. But in many cases nowadays, we just think that, oh, cheaper, that more innovative. Oh my God, it's cheaper than taxis. It's cheaper than this and that, or banking services also. What is your take on this? Maybe we can start from Vania.
Sure. Well, if we go back to the fundamental or the definition of innovation, I think as long as a startup or a company, they provide a new way to disrupt. I know that we've been using the word disrupt so many times now, but if they disrupt or if they offer a more efficient or effective way of doing something, I can still say that it can be portrayed as an innovation. But then a startup, as you can see how agile they are, how fast they have to adapt, they can always revisit their monetization strategy and their business model. And I think a good company, a good startup founder should be able to accept that sometimes they have to change the business model or the way they make money in order to survive, in order to reach profitability.
Thank you. Mameaw?
Yeah, I think we have to separate the so-called innovation and the business model. You know, like because cutting the price low is sometimes a part of the business model and the vision of the business. That is, a lot of businesses, they have this models that they want to acquire as many customers as possible for the monetization. That's why they, you know, like have been operating on like really low price in order to gain more customers than their competitors. But yeah, as being said, being innovative is, you know, like you can put it in the simple terms that it's faster, cheaper, or better than the existing solution. But how they manage, you know, the monetization process and how they would like to gain the customers, then it depends on each company and each monetization strategy. And the ones that tend to cut price lower, it depends on they want to acquire customers faster than the competitors, or they have, you know, been a really bad strategist. You know, like they're like not planning well ahead. So it could be both. And either way, if you cannot monetize in the end, then yeah, and then it's not going to be healthy.
Okay, Irfan?
Yeah. So again, you know, I agree with Mameaw, and essentially, you know, so we got to separate these two things out, right? So innovation and business model are two different things. However, you know, they're crisscrossing, intercrossing each other in most many points. So the intersection points are in many places, right? So within innovation, of course, you know, you need business model to sustain that innovation. And of course, the definition of innovation suggests that, you know, it is, you know, a newer way of doing things, which is better, you know, either faster, better, cheaper, or just, you know, simply a completely different model to approach same and come to the same solution. But at the same time, you know, within the business model, you would see innovation, right? So how you monetize, you know, internally, you know, you could have different monetization strategy or business strategy, which could be also dubbed as innovative. However, you know, and this is something that we have learned, you know, during our time when we were involved in the early developments of some of the startups in a particular technology industry, in this case blockchain. This is a term that I always use, is that innovation stream cannot happen in all different sectors, because if you are innovating everywhere, you're not settling anywhere. So there could be two sides, and on one side you could have the innovation going, but another side you have the base, which is essentially creating the stability into the organization. In this case, business case, profitability. So one has to remain on a constant in order to make sure that innovation can take place. So if you wanna, so it's about strategies and how you want to do it, because if you're completely fluid, you're not going to take shape anywhere, and if you're not taking shape, you're not able to pivot or even create a position in the market where you're trying to provide services to. Thanks, David.
Okay, thank you. I have some questions from the live chat. Let's just tackle some of them, and then let's come back to the discussion. Somebody from Tokyo asked this question. I want you to think about it a little bit. So what he says, that businesses are suffering now, as you know, because of COVID-19. And then many companies actually start laying off many staff members and employees. From the perspective of investors, when you see those kind of companies, that means that they are suffering already. So how do you think that they can overcome this situation, minimizing the layoff? I know it's not only from the perspective of investors, but if the company is going well, like for example, some startup companies or some SMEs actually doing even better because their business models are not affected by the COVID-19. But on the other hand, when the companies actually start laying off people, it means that they are already affected. But still, in your opinion, is there any way that they can minimize the layoff, in your opinion? So maybe you can, it's a very tough question, I know. So there's no correct answer for this. And maybe you can start from Mameaw.
Yeah, I think about what my portfolio companies have been doing for the startups. It's really tough not to lay off, to cut costs, because a lot of times startups are asset light, right? So they don't have any other big costs other than the salary and the office. So if you want to reduce the cost, so the only way is to lay off people. And it's really hard, because once you lay off the people, and then when the pandemic is over, you cannot restart the business without the people. The people who's been with you, like they know how to operate the business, they have the connections. So you really have to be tough and make a decision who to lay off. Or maybe you can, divide the salary into maybe into portions, and then ask the employees to come in shift. So you can still keep the people, but you reduce the cost. So there are like many models and like many ways you can play around with keeping people with the low cost. So yeah, I think that's the only way.
Okay, thank you. Thank you. Irfan or Vania? Maybe Vania?
Sure. We've been doing a few exercises with our existing portfolios, because our portfolios, they're in different stages. We understand that the first thing that we asked the founders to do was to sit down with their finance guy or girl, their finance team, to look at their finances and look at their runway as well. We ask them if there's any cost or expenses that they can cut. Is there any US dollar expenses in US dollars, because we transact in Indonesian rupiah, and the exchange rate was crazy back in March or April. But yeah, we asked them to sit down and rethink and restructure their revenue target, their expenses. Some of them went way ahead of us and came up with a completely new business model, which we were very proud to listen to, and they survived. yes, a few of them had to lay some people off, but I guess that's a process that they have to go through. And what's more important is to think about the next 12 to 18 months, because it's going to be challenging. No one's going to know when this pandemic is going to get to be over, and what founders or what us as investors can help or guide our existing portfolio is to help them to think and to plan for the next 12 to 18 months with this condition.
Thank you. Irfan?
Yeah, this is a very tough question. First of all, there is, again, just like you said, there is no right answer, and depending on what stage a company is at, right? So if it's a company is at a very early stage, we're talking about the early members of the organization. If it's in a mid stage or a more growth stage, it's a whole different story. And it's a stage where a company is already having recurring positive revenue. It's another stage. Now, for startups, I always like to say this, is that people are your assets, and knowing the people is very, very important. If you have people who's simply there just to make phone calls and make sales call, or like just doing outreach, I don't think you understand your people well enough in the organization, and I don't think that's a necessity right now for any organization to be buried. But and that's why I say that for any startups, EQ is an important aspect. Your team member is more than just making sales call, more than just pitching, more than doing customer support, etc., etc. They have assets within them that they are able to provide either value, or which you manage to identify in the early stages to bring them on board the company. Try to find that. Try to see, how different innovative models that can be found in order where you could create a symbiotic relationship between yourself and your people. And at the same time, it's also important, just like and I think for everyone who is involved, whether in the startup industry or any industry, the false sense of security is a major problem, right? Because we always tend to think that we have a certain sense of security. However, I mean, pandemic or not, we were already looking at a situation where there would be many job losses that'll be coming, right? So there's AI innovation that's already taking over, fintech, and other services and technology evolutions that are happening. So the point, what I'm trying to say, it's never an easy process to lay off jobs. It's never easy, and it's never will be. But at the same time, if that is what it takes for you to survive your company, then you should be able to communicate that message, and also be able to partially reward the people. And again, this where it comes down to, like I said, if you were constantly communicating with your team members, then it's a whole different story. I'm sure we're all familiar with one such large organization who laid off thousands of people via 5 minutes Zoom call. And the reason we have seen that is because these guys have taken over a company where they were not the founders of the company, but it is also part of a startup. So I just wanted to pause right there. It's obviously, definitely, there's no direct answer, and of course, it's always painful and challenging. But one has to make certain decisions to make sure that they can keep their company floating. Thanks, David.
Okay, thank you. Let's go to the next question, because I think the next question is very relevant to the current situation. Thank you for the question, Chris, from the San Francisco. So now, because as you know, if you have already track record, it's easier for you to get investment. Let's say that your business also is right for the pandemic situation. Then her question is, what if the startup companies don't have a track record, but they also want to raise funds? So what strategy would you recommend? Maybe we can start from Irfan.
Yeah. So I think when we're looking at startups, of course, every startup is different, and they might not have, experience, and that's why we are involved in the early stages, in the seed stages, right? So as I said, how well you understand the problem at stake over here, it's a very important aspect. How well you're able to convince me that you understand the problem with the analysis, that's another factor that we'll be looking at. But again, I'll go back to my original answer from before, is the attitude, right? So it is with the attitude that one is able to go ahead and still raise funds. So one factor is that what kind of solution one is looking at, right? So and as we have already discussed in the session, right, today, that there are certain sectors that are in dire need of new services, right? So whether it's in the healthcare sector, whether it's in the education sector, whether it's in the, even in fact, property sector, which is an interesting area to look at in a place where, people are looking to feel more secure and have more secured investments, which is more tangible. So identifying the industry that you want to participate in is also a very important thing, and based on your understanding, and especially in a time like this where certain sectors would play a more vital part in us getting the global economy back on track. So that's my take on the question. Thank you, and thanks for the question, Chris.
Okay, thank you. Maybe Vania, can you also add your insight?
Sure. Completely agree with Irfan. A lot of important points that he made just now. Well, in general, maybe a startup founder would start off with bootstrapping, and by bootstrapping, you could achieve so many things like product market fit, and it validates your idea as well, and it shows traction. Because for us personally, we do want to see traction. At least the startup has to run for 6 to 12 months so that it helps to validate the product and services that you offer to your users. And then the second point that I want to make for this question is to identify the right VC or investors. I think it's very important because different VCs have different investment theses, they have different ticket sizes, and knowing who to talk to at your stage of your startup is very important, because you would waste your time talking to someone with a larger ticket size when you only need a few hundred or a few $1,000s to start off your business. So identifying and talking to the right VCs is important.
Thank you. Mameaw, would you like to add something more?
Yeah, just a little bit. I would like to say I really agree with Vanya that you should do your homework and then go talk to the right people or the investor at the right stage. For example, I just assume if you don't have any traction, then it would be like the idea stage or maybe the pre-seed stage where it's really, really early on in doing business. That means I think it might be like you either can like bootstraps or get the money from family and friends, or maybe go to angel investors. Like angel investors, you can be involved in the industry that it could be like the expert in the industry that you are in. They can be an advisor who has been helping you and giving you advice, or anyone who believes in your idea. So yeah, that would be my suggestions.
Okay, so thank you very much. We have a limited time, so let me just go a little bit quicker. So another question I think is just relevant to what you just discussed a little bit. But some startup companies actually are looking for investment when they think that they are desperate, or when they start losing profit, or when they start having some financial problems. And then, or on the other hand, some startup companies actually, they don't even look at investment raising. They think that I don't need the investment because my business is going well. But then they think that, oh, why do I need the investors? I can just do my business. But when they start declining, they say that their business is not going well, and then that's when they start looking for investment. So his question is about, is it better that I get fund investment or I just continue to bootstrap? Or, you know what I mean, right? So what is your take on this? Some startup companies actually talked to me before that, oh, David, I need an investment because my business is not going well anymore. His business was doing great before. Then he's also confused about when is the best time for him to get the investment, or when is the best time for them to just continue to bootstrapping. So anyone, maybe can I ask? Yeah, Irfan, okay, go ahead.
Yeah, so it's a very interesting question, and I personally, would always recommend, to bootstrap. And the reason is, is because it allows you the room to test certain things, and also if you're a first-time startup founder, it allows you the room to test certain things, learn certain things, and also be vested what it means to be, basically getting your, skin into the game in order to get your startup off the ground. And in fact, it's just a very personal experience. I personally prefer, startups, and I have actually, made investment in startups who are not looking for investments. In fact, that's one of the things that I actually like in startups, because, they know what they're doing. They're pretty confident in their revenue model, and they have been, getting very good numbers in terms of percentages, maybe not large in number, which became like, an interesting find for me to get into that deal. So as an investor, I mean, it's a very important psychology for investors also, that most investors would want to get into deals that they see are pretty promising. But then on the other side, of course, once you're building startup, you do need, and as in the earlier answer Mameaw was mentioning, is that you go in stages with different investors, right? So when you move from idea stage to kind of like a seed stage, you look with angel investors and even angel syndicates, and then as you grow to the seed to your Series A, that's where you're essentially looking for institutional investors, not only to validate your valuation, but also allow you to go to the growth cycle of your organization, as the institutional investors brings in that support structure that you're going to need in order to scale your company. So it's different stages, different play. But if you're talking about a startup that's in the idea stage, bootstrap is so much better than getting in any investors in the early stages. So that's my take on that. Thanks, David.
Okay, thank you. Vanya?
Completely agree with both Mameaw and Irfan on different stages requires different investors. You can start off with bootstrapping with your own personal savings, and then from your family and friends, maybe you got a rich aunt or uncle, and then you can go to angels or advisors, angel investors or advisors, and then you go to institutional investors. But I think it's also important to go back to the reason to why you're doing this, why you need someone else's money, why you are looking for an external investors. Do you see other values, other strategic value if you get an investment from this particular investor? Will it boost your growth? Will it help your scalability? Will it help you reach profitability? So it's also important for you to know the reason why you're looking for external investors.
Okay, thank you. Let's just go to a couple of more questions and then we wrap up, because I know the time is already beyond 1 hour. Thank you very much for your patience, and I really appreciate it. Just another question from Sri Bintang is, based on your experience, could you share how to identify what is the best business for startup in the pandemic situation like now? So it means that how do you find the startup companies to invest in at the moment during the pandemic situation? Because in the newspaper, the news media, they say that now the investment is actually shrinking, and investors are really trying not to invest too much. And they, of course, certain sectors they heavily investing in, but still what are your criteria, or how you're trying to find the startup companies you really want to invest in during the pandemic? Anyone is ready? You can start. Like maybe I can ask Mameaw, maybe.
Yeah, sure. Since we already mentioned about the industries that are growing during the pandemic time, so let's talk about other criteria that we usually look at. Well, for our fund, or for me personally, I would look more into the businesses that may have more flexibilities in how they operate. You know, like they might have a few business models, not just like B2C, but they can also like go to B2B if they want to, or the businesses that are easily can be transformed into other, or like pivot into other businesses. So we want to make sure the businesses can survive in any situation, you know, not just for the pandemic, but, you know, what if we have another crisis like the economic crisis, or any other crisis that we might not know in ahead of time. Yeah, so that's my take.
Thank you, Vania.
Yeah, for me, it's businesses who can leverage opportunity, because amid the pandemic, I believe there's still opportunities, and how to make the business model sustainable. Just to give a very general example, the way that people buy groceries here, at least here in Jakarta, Indonesia, some of us still go to traditional market, but then with COVID, they're all closed. So they move to digital, they move to WhatsApp. It may seem like a very ordinary gesture, but I think if someone could leverage grocery logistic, and many people have, I believe, and try to make it sustainable, that's like the example of what I just said, like leveraging the opportunity and make it sustainable. So I think that's important.
Irfan?
Yeah. So for starters, of course, I like Vania's example, finding opportunity and then making use of that. And also, I mean, of course, it's saying this question also is kind of like a magic lantern question, because as an investor for us, it's like, what business would be the best opportunities? I want to double down all my investments into. But to be honest, there are several opportunities, really. There are many industry sectors, and, as there are challenges, there needs to be solution. People need to get their life going, whether it's people, whether, businesses, etc. So try to see, the different pain points of, several sectors, or any sectors that you understand more. I mean, just the other day, I mean, a lot of people over here are having issues with dealing with their house-related work. If you have, logistic support that you need, any fixing, repairing damage that you need to be done, people are having problem because, because of the pandemic, people cannot come and pay a visit. And then there's a innovative company that came out, trying to deal this thing in a completely different way, where, they're connecting e-commerce model as well as, kind of like second service rent share model of products that they're trying to distribute out, so that, you can get these things fixed. So there's always, something very, very interesting that comes up, in a very challenging situation. In fact, challenges where there right now is very, and all the more apparent and more visible. So my suggestion is that as long as you understand the problem, see the major pain point, and, try to build a business around that, and try to look into all the stakeholders that plays a big part into the solution that you're trying to create. So that's my suggestion. Thanks, David.
Okay, thank you. Let's go to the last question from the live chat. So Claudia, question is about how do you see the lifestyle startup, like for example, like furniture companies, because furniture companies are suffering also because people usually wants to see the furniture in person. I mean, directly, right? They don't want to just look at the photos. They want to go to the store, and then they want to touch this, the texture, and the furniture itself, and then they want to buy. How do you see the lifestyle startups in the pandemic or after pandemic, like a new normal situation? Maybe I can ask, maybe just briefly, just it's the last question anyway. So maybe we can start from Mameaw.
Yeah, sure. I think when you talk about the lifestyle startups, it's a bit vague because a lot of startups, lifestyle, it requires some experience that cannot be replaced with an online solutions. And also another group that is easily can be replaced by online. I think like right now during the pandemic, everybody is okay, to be compromised with using an online solutions. For example, for the furnitures, we want to touch and feel the texture of the real thing before we purchase, right? But if you really, really need that furnitures and during the pandemic, I think like people are now, are slowly accepting this online replacement and the solutions, and then they are slowly changing their behavior, like purchasing behavior, because of the pandemic. But I think like once it ends, there's still an opportunity for the startups that require the real life experience.
Okay, thank you. Vanya, you would like to add something?
Sure. I think I look at this question with a very simple mindset by leveraging technology. For example, if you own a furniture company, then you can use the AR, VR technology to actually give a realistic feel to your customers on how that piece of furniture would look like in your house, in their house, in the customer's house. And for F&B, maybe it's the COVID, the pandemic is forcing everyone within the F&B to go digital. Maybe provide digital menu, provide digital ordering system. Just leverage technology, and that's how I see the question, David. Thanks.
Okay. Thank you, Irfan. Briefly.
Yeah, I couldn't agree with Vanya more. In fact, interestingly enough, what she just mentioned. So there's a big furniture company over here called Gardner White. Organized a hackathon about 1.5 years ago, where students from universities actually came up with newer models of how they can provide digital sales and solution to an online experience of buying a furniture. Not only that, they created models where you can redesign your whole house based on some of the furniture. The texture problem can easily be solved also, as some of these furnitures, use some standard, textures which can easily be sent as samples for customers to understand rather than the whole process. On the other hand, I would just like to share that because technology, it has been enabling a lot of things. In this case, the real estate market in the US have been very active. And it's been growing. The buying and selling is going even more, and people are actually doing that right now with a lot of video showings of the house. So and as I'm saying, people who are not used to that kind of technology or technology adoption have adopted. I mean, and at the same time, are familiar with it. So I think not everything, of course, technology can resolve. We are still few years away from that, what we call singularity. But until then, we have certain technology that there is that will enable us to do innovative ways to provide businesses to our consumers and our customers. Thank you.
Okay, thank you, everyone. This is the last question. Actually, it's more like a closing remark from each one of you. So because one of the viewers that our channel is that the policymakers, government officials from 21 member countries. So I would like to ask your opinion about, do you think is there anything the government can do to help the startup companies and ecosystem and to boosting their productivity, or just any aspect to help the startup companies and ecosystem? Yeah, maybe we can start from, I see the Mameaw seems to be ready. Okay.
Oh, well, actually, a few months ago during the pandemic, the Thailand Tech Startup Association, we had like a big gathering to communicate with the policymakers and the big corporates in Thailand that during this pandemic, we cannot travel out or in of the country, and so a lot of Thai startups are dying because a lot of the companies, the tech companies are from overseas country, and nobody is really using the local startups. This is the situation that is happening in Thailand. So we want to, make a shout out to like the policymakers and the corporates to come back and look at the local products, local SMEs, and the local startups, and try to use it. And you'll see that the technology and the experience is not, worse from the international startups. So yeah, that's the very quick and answer for me.
Okay, thank you. Vania?
Sure. I guess different countries have different needs regarding their policy for startups and SMEs. But speaking from Indonesian point of view, looking at our infrastructure and looking at how Indonesia is made out of 17,000 islands, 5 big islands, and I see opportunities. I see excited founders from all over the place, all over the islands. Unfortunately, the infrastructure is not helping us to decentralize, moving away from Jakarta because it's the capital city. It's where everything is going on. I think if they put consideration into infrastructure and how to make it even so that everyone across Indonesia, and I'm just not just talking about Jakarta, but everyone in other cities and other islands have equal opportunity to fundings, to education, to trainings, to everything that will equip them to create better economy, better startups, better creative economy. That would be perfect.
Irfan?
Yeah, thanks, David. This is a very tough question, but also very personal. So I think, in terms of, if you're talking about Bangladesh or, most countries across the world have faced this. But essentially, I think it's converting dependency to independency. And what that means essentially is that, during the closing of the borders, in different parts of the world, it seems like an essential bloodline and lifeline was taken away from that country, whether it is the healthcare sector, whether it is the supply chain sector, or whether, in Bangladesh's case, the RMG or the ready-made garments in the textile sector, which has been a major important sector, and which relies heavily on export, has been majorly affected. And this is something that I've been constantly talking about, and government needs to understand that, supporting local companies, local startups, not only enable new opportunities and, also capacities for internal countries to be able to resolve problems internally, but also at the same time empowers people, creates new, employment opportunities, as well as sustainability during situations that that we cannot foresee. So of course, having faith in your society, in your people, would enable you to do things, and that's the most important thing. So, and I think, as Vania mentioned, because of a lot of the essential things being cut off, one can easily look into how this could be an opportunity to restart the process of of culture of incorporating local businesses into everyday usages. So that's kind of like my ask. But thank you, David, and everyone else for this wonderful session.
Thank you very much for your precious time. I'm so sorry that we went beyond already 1 hour. Don't blame me later, please. I just want to say thank you for your time. And then I would like just to say 2 things before we wrap up. So next Monday, actually, there's one of the very innovative startup companies for healthcare sector. Vice President of Hello Duck, will be on Talk next Monday, July 13th, 2 p.m. Japan time. So stay tuned. And then I would like to actually wrap up our session with this one, that great spirits have always encountered violent opposition from mediocre minds, Albert Einstein. So no matter where you are, entrepreneurs and startup CEOs and founders, no matter how violent opposition you might face, don't lose out. Just hang in there, and then prove that you are able to thrive. So I really appreciate your time again, and thank you very much for 1 hour. Oh my God, 1 hour and 25 minutes already. Guys, I'm so sorry. So anyway, stay safe. It's still, because the COVID-19 is really not exactly coming to an end yet. So let's just be safe, and then just do our best to make things happen to change the world. So people say that don't just expect change, be the change you want to see in the world, right? So anyway, thank you very much for a long time. Thank you for the staying tuned, viewers. So you please subscribe to our channel. You know that if you don't subscribe to the channel, you are missing out a lot. So see you in next Talk. Okay, guys, have a nice day. Have a nice night. Irfan, thank you very much for not sleeping yet. Okay, guys, thank you.
Thank you,
well.
everyone.
Thank you,
And
everyone.
thanks to the
Thank you,
audience
David.
for wonderful questions. Thank you.
Thank you,
Okay.
David.
Thank you.